Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. How is everyone doing today? We got some dedicated people on the live stream. Super Bowl Sunday. Not that everybody has to watch the Super Bowl or anything. After this is done, I will put it on. I will not put on the pregame too early, but I will have it on. So, again, let's see. We have to still prep for the week coming up. Otherwise, we will not be prepared unless you are taking off tomorrow. And some people I know will be taking off tomorrow, but I am not taking it off from the market. So I need to do my prep and might as well invite everybody else along. Hello, Options 22. First comment of the live stream, by the way. I do have the earnings coming up this week. We always look at that. It is still earnings season, so we have to be prepared for that. Tomorrow, Valentine's Day. Not that that's really going to affect the markets at all, but we should be prepared for that in case you have not prepared and got your significant other, boyfriend, girlfriend, dog, cat, bird, whatever, a Valentine's Day present. Hello, Sterling. Hello, Jake. I'm glad you are here. Thank you for being here. That is some market dedication. By the way, if you are new here or watching it on replay, still trying to madly prep before the open on Monday, please do consider subscribing, ringing that bell, and hitting that like button, and leaving some ever important comments. Or if you don't like what I have to say about the market, you can just click that dislike button. So let's just take a quick look at the earnings. Let's see my cameras. It was working fine before. That's not bad. It's not as blurry as normal. Not as blurry as it's been. I keep trying to mess with stuff, but let's just, there we go. There we go. Perfect. Oh, wait. Hey, Christoph. Hope you are great. Just started watching sector video. You got me intrigued with the new system. And I'm gonna put it out there for a super cheap price. Pretty much just covers some cost of hosting and some of my time to put it all together. But it's gonna definitely be worth your while. And I'm gonna do a free video for people if they're not interested in supporting the channel with that. Then I will show you. I'm not gonna give you all my exact rules in the free video, but I'll show you how I've come up with stuff, different combinations to consider. So if you want to work on developing your own system, then go right ahead. Long-term systems are really helpful right now when you're in distribution to help you know what to get out of and when to get back in from a macro perspective. And I did cover this in the sector analysis. It's really good to know what sectors are setting up for major sell signals, which are in buy mode, and what to do, because especially with these market sell-offs and longer term, I am still very bearish on the market. And Jake, you got me on the next question. Bengals or Rams? Bengals or Rams? Well, for me, I don't have any skin in the game with either team, but I'm sort of rooting for the Bengals. But my wife is from Orange County originally and grew up in Orange County and LA area. So she is going for the LA Rams, of course. She doesn't like football, though, so it really doesn't matter. I'm just going for the Bengals. So there we go. We can sort of root on opposite sides. Again, I'm not a fanatic with football. I do love football, though. I do like football. Let me put it that way. Back to the sector video you should really watch. Again, anybody watching this on demand, if you have not watched my sector analysis, it's really interesting this week with a number of the sectors that could tip over into major sell signals. And that's part of the reasons I put it up there. I'm going to try to mix it up each week to keep it fresh and new. So this week it was focusing on the long term and what could be potentially pulling back even more, which is helpful. For example, let's say you're holding a bunch of consumer discretionary stocks, which could be hitting a long-term sell signal, not just a short-term pullback signal, but a long-term. Therefore, you better know where your stops are, or you better be raising your stops and looking to protect profits and or unwinding positions once we get that long-term sell signal. Why? Because if the market keeps dropping and the sectors, if you have a weak market and you're in a weak sector, unless you have a super resilient stock, they can get dragged down. And even a super resilient stock can still get hammered with the rest of the market and that specific sector. So why not reposition your portfolio into some things that at least have longer term buys still in place and can continue to rally in this inflationary environment with the market with potentially pulling back. That all being said, that was a very long-winded sort of run on, but let's take a look at the earnings. Not much going on Monday that I'm super interested in. If you want me to look at any of these during this live stream, let me know. Tuesday, again, not much that I'm interested in. I'll glance at Airbnb. I'll be looking at Viacom CBS because I'm actually interested in that for a potential long-term play at some point. Wednesday is going to be interesting. Definitely going to be watching Shopify. Let's see, Kraft Heinz, because consumer staples is, not to ruin sector overview, but that is in still a bullish position with a short-term pullback potential. Tune in the sector overview for I go into that specifically. So I'm watching for potentially entries in some of these consumer staple stocks. What else am I looking at? Nvidia after the close, definitely. Applied Materials, definitely. Cisco, because I've been following that since even before the .com boom. I'll glance at DoorDash. Thursday, a lot of people will be looking at Planter, or as I say, or Palantir. I'll be specifically looking at Walmart with aspect of looking, and especially if they have any comments on they will give guidance, but how the consumer is faring and inflationary aspects. What else will I look at? Let's see, Roku after the close. What else? Not much. Oh, definitely Redfin from a real estate point of view. And Friday, definitely, I'm going to be looking at John Deere. I know some people will be watching DraftKings, but I'm going to be focused on John Deere, and that's pretty much breaks it down. So let me see here. Hey, Josh. Hey, glad you are here. Thank you. All right, looking at what's going on this week, we have FOMC. Bullard speaking tomorrow, so let's see if they try to talk stuff up, talk stuff down, prep the market. We still have QE going through March 9th. I'm seeing these comments, everything's priced in, which is the most idiotic thing you can say right now, because how can an unknown quantity of rate hikes be priced in since it's unknown at this point? Unless you're talking, a March rate hike, fine. That could be priced in. But are you doing 6? Are you getting 7? We have an economy that could tip into recession. Is that priced in? And you haven't even started talking quantitative tightening. And you don't even know how much tightening could take place. So is that priced in when there's all these unknowns? So I'm tired of hearing it's all priced in. That's just people looking to justify buying the dip. And we will get short-term bounces, but long-term rollovers, at least until something changes. And that's from a fundamental standpoint and where the probabilities fit technically. Tuesday, we have a critical PPI, producer price index, and core PPI. So that's going to be big. Empire State, going to watch where that comes in versus the forecast. I think that's a little optimistic, but we're going to see. So Tuesday is definitely a before the market moving day. Wednesday, you got core retail sales going to be critical, and retail sales. Big before the market also. Crude oil, I'm going to be watching. We had that little bounce. We did a sideways correction. We'll take a look at that during this market overview because I was watching for a pullback. We got the sideways correction. I'm still watching for a longer term pullback once, and if this Russia-Ukraine stuff does die down. And then Wednesday afternoon, FOMC meeting minutes is going to be very important. Again, that's from the last meeting. But we'll see if there's any information in that. Philly Fed Manufacturing Index, Unemployment claims, going to always check that out. Building permits and housing starts, definitely, because I'm getting more and more bearish on housing. Mortgage rates have been going up. The sector, you're going to have to watch the sector overview, but you'll see what I think about the housing sector and the real estate sector in the sector overview. And then we have more FOMC speakers Thursday afternoon and evening. Friday, existing home sales, going to definitely be paying attention to that. And then we have more FOMC, and then we have the Fed monetary report. So we have a lot of FOMC at the end of the week and the beginning of the week. So that's definitely going to be potentially moving stuff. Who else do we have here? Wavy, hello, hello. Bull say it's all priced in, everything in. SPX 5K end of year. Well, yeah, everything's priced in. You just buy the dip, and this is where, you know what? I'll know when we're getting closer to a bottom, when everything's not priced in and people are starting to cry. And I don't have everything. Is this a dip to buy? I mean, I talk to people to hear their opinion. Everybody's like, should I buy more? Is this a dip? Is it over yet? Every pullback, is it over yet? You know what? I want people to be puking. I want people to like, oh, I don't want to look at my portfolio. The reason we're doing it here is because even if we stop out of stuff, even if we cut things and take some losses or lock in some gains, we're going to be well positioned to take advantage of things when there is a solid bottom and when there are a lot of great long-term buying opportunities. Not to say there won't be bounces, and when I see reversal patterns, I will put them out there. But those will probably be very short-term plays, not something where it's, okay, this might be in my portfolio for the next 2 or 3 years. It might be something that might be in my portfolio for a week or less. The only one who wants to invade Ukraine is the final respiration. Prepare for job owning. Exactly, Raj. Glad to have you here as always, Raj. Wonderful. Everybody who's commenting so far, wonderful members of this channel, and I appreciate all of you. The only one who wants Russia to invade Ukraine is the Biden administration. Who knows what's real anymore, but this is the thing. It's all going to be newsreel, and we have to be prepared, and things are going to have short-term bounces and sell-offs and this and that, and everything's in the news cycle now, especially in a distribution market, because everybody's reacting to stuff. Is this going to change the market? Overall, that's why long-term, I'm in bearish mode still, fundamentally and technically. Let's take a look at that heat map from Friday. There is a lot of red on here. Energy sector, and you had that stuff with the war drums supposedly beating with Russia and Ukraine. You had energy strong, and overall, I'm going to plug it again. Sector overview, energy sector is very strong. You won't go view it now, but energy sector, I'm watching for pullbacks though, but this is a great area to be in long term still. There's not a lot of other stuff. Again, consumer staples, great longer term. And you see here, like tobacco is a consumer staple because people generally, if you're a smoker, you're not going to just, even if your cigarette prices go up a bit, you don't just go, I'm going to quit. I think people should not smoke. However, just like people aren't going to give up their alcohol. People aren't, in states where it's legalized marijuana, people aren't going to just give up that because the price goes up a bit. No. Those are considered consumer staples. I've even put cannabis stocks in consumer staples. I'm actually watching for some bottoming formations in those. Financial pullback, by the way, PayPal still looking ugly. Talked with somebody on the phone today about that. We may get some bounces, but longer term, I am still looking for more PayPal pain. So it's nothing I'd go into long term. Banks, a slight pullback, but I am still, the financial sector is still decent longer term. You just got to pick your places. You see Lockheed Martin down here, green, again, war drums, etc., stuff like that. But when you see stuff like this, you got to be really picky with what you're going into. Really picky. So don't just blindly run in. Let's take a look at how the Fed Watch tool finished the day. If it actually refreshes for me. Other than that, we might have to wait. It looks, oh, here we go. Sorry for that delay. I should have refreshed that before this. I just forgot to do it. Look at this. Essentially 50-50 odds going into starting this week. We'll have to see with the FOMC members speaking how this shifts day to day, but you essentially have a 50-50 split between a 25 and 50 basis point hike. Oh, that's where I sit right now. Now, Let's take a look at some of these markets to prepare ourselves. By the way, I pulled off those doubles that hit the double bottoms that hit the first and second target because this now essentially has invalidated the final target on them. You see this now triggering a double top. First target, and this doesn't have to go there tomorrow, but I will be watching. The only thing that would really invalidate this is if we get back above about 45-40 area. Until that happens, we got 43.65. Then we have a significant level and the second target coming in at about 43.30. Would not ignore that. And last but not least, the final target, 42.92. So roughly 4,300 with this longer term rising trend line. Would not ignore that longer term rising trend line. Oops, wrong. I clicked on the wrong thing. That longer term, don't even have it on that chart. Oops, I'll have to fix that. Longer term rising trend line, you see this is the defining point right here, January 25th, and the anchoring point is a long time ago. So that's going to be an area of support again down here. If we do break below that, then watch out below. On any rallies, again, I have the retracement harmonics on here. The 50% level, you see here we have a harmonic projection, retracement harmonics, and closing above that, barely, but that is not very bullish for right now. The 50% level. Key area I'll be watching on a closing basis is just below the first target of about 43.53. Get a close below that, then I'm definitely short-term watching for a retest of the low area. That doesn't necessarily mean the exact low print. It means the low area, and the low area is between 4,300 to about 42.12, and we can fine-tune that with some shorter-term price movement. Just looking at some of the harmonics lower, this first target is right below the 43.69 harmonic, so that's a key little harmonic cluster. Next harmonic would be minor, that's 43.45, and then again the major support right now is about 43.27. On a rally, the 200, we're back below the 200 simple on the daily. So 44.46 is the first level of key resistance on any short-term rally, and that would just be returning to the base of this double top area. So there's going to be pretty substantial resistance. We get above that, I'm at about 44.70 as my next target. Then the next target I'd use is about 44.92 to 4,500 on the upside. Welcome, 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 Tesla Force. Glad to have you here. And again, we have Abraham chiming in with the double smiley faces. NASDAQ, you see also, now this is a slightly lower probability on the daily double top, but the 4 hour, where it is still a double top, the second target also does not fit in. So we have to take this. My first major target would be to utilize this 14,000 area on a continued decline. That's really what I'm watching for. Oops, I don't want that one. I want this one. That's the next area I'm watching for. Right here, we have a significant level. We have now a harmonic projection at 14,046, about 14,018. 14,023. So that's your major short term. Let me zoom in here. Price targets to the downside. Next area will be the 87.5 retracement and this 13,911 projection cluster. So you're looking about 13,900. Then below that, I'd be watching the most recent lows. Okay, on a rally, 14,362 and then 14,483 are key. Next significant area would be about 14,550, and then I'd be watching 14,677 to the upside, but this definitely still favors low prices, and it pretty much kissed the 200 away on the NASDAQ, the 200 moving average. That's a simple one. You're best to use a simple moving average, not an exponential one, for the 200 period. It tests out way better. So that's where we sit. Again, bearish mode short term on the indices. Now, anything can happen. You got Fed members speaking, but long term, even on rallies, watching for another rollover, and you see the declining rotation zone is clearly in bearish mode. Let me jump back to the S&P real quick because we have bearish mode on the daily and also now bearish mode on the weekly. So the weekly's now shifted to bearish. So we're across the board bearish mode. So rallies are to be sold on multiple time frames. NASDAQ in the weekly also bearish mode. And as we said, the daily in bearish mode. So rallies will most definitely happen, especially rip your face off rallies, but they will be rallies to be sold for the time being. Let's see. Let's get to some more comments before we get to the Dow. I have a feeling one of these days we're going to get just that massive gap down out of nowhere. Or we could see, so I could see some real blood in the streets one of these days coming up where it's just, I could even see a day where we get some short-term market halts where you get the circuit breakers going. Will that happen tomorrow? There's nothing to say it will happen tomorrow, but I will not be surprised if we don't see that at some point shortly. Many will be blown out of the water. I think many of the people, especially who are rushing into buying the dip, again, we have not had a major pullback in the markets. We had the minor ones, but they were so quickly bought up. Even this was minor compared to what I think we're going to go through. So I think we're more and more going to get blown out of the markets. Why did you mark off a double top? Seems to violate the rules. This double top technically does. I'm keeping an eye on it just because of the bearish patterns and this first target specifically. I'm not doing a bunch of shorts on here. It does technically because this goes into the wicks and so does this one. But I'm keeping an eye. I'm not focusing on the second and third targets, although since we did close below 62.5, I am focused since this target is right by those lows. I am keeping an eye on it because there's other reasons I'm watching it. But the probabilities are not there with trading the double. Now, the probabilities are completely there with trading it on the S&P. And let's roll into the Dow, which did also trigger the double. And this is the second target is within these candle bodies. So we have 2 out of 3 doubles. So I'm giving the NASDAQ sort of the benefit of the doubt. And I can use those targets for especially short-term support areas. Does that answer your question, Christoph? Let me know in a future comment. Quick trades needed in this environment on those temporary rallies, and that's why, again, I will watch for stuff like I could trade the spiders, the Qs, or the diamonds to take advantage of things unless there's really strong individual setups. But those individual setups will be pretty much in those sectors that are still bullish. Again, another plug for a video. Yeah, I think I answered that already. So, Christoph, let me know if that clarified it. I'm using them for targets again. Dow triggered this double. My first target on that's 34,207. Then again, second target is right at a significant level, which was already on the chart. Love when that happens. 33,989. Let's just go to 34,000. Final target is 33,727. The key area for the Dow is about 33,972 on a closing basis. Really, I'm watching. We might get a little reaction at this 50% level from this run up. So I might hedge up my first target just a bit to about 34,300. Okay, won't get super aggressive to move us down a stop, but that's an area I'll be watching just because that's a key level to focus on. Oops, and you know what I didn't do? I didn't raise that. You got to ignore that last level because now it's at 34,400. I forgot to raise that target, and when you make a mistake, you got to correct it. You gotta correct it. Let me just adjust a couple of these levels for a rally. It's back below the 200, and that's a significant level now, about 34,980 on any rally above there. My next key level, I'm just looking here to see where we sit. Bumping this down, we got some significance there. Got some significance here, right here, about 35,130. That's where I'm looking for. But again, all these we have, and it's not even oversold yet on the daily and the weekly. Again, we have the first cross of the rotation zone. So Dow in bearish mode on the weekly, in bearish mode on the daily. So rallies, again, are to be sold from our perspective. Let's see, Christoph. Yeah, it did answer the question. I actually figured out that the targets often work, even though they don't technically didn't fit the rules, and especially when they line up with other key things, I still can use the targets because the probability shift slower. Okay, that it will hit them, but they are still valid targets. Now, if I was going to pick and choose of which ones to establish hedging positions in, I'd be favoring more for the longer term full targets, the Dow and the S&P. Does that mean I can't use the NASDAQ to trade? By the way, this is also great when you have targets like this. This is, you can hedge. What could you hedge with even in S&P? You could some use like the SPXU, which is an inverse S&P fund. So you could actually go long that, and if the S&P declines, that goes up, and you could use that to potentially offset some losses in your portfolio. Russell's sort of interesting right now. Russell is sort of interesting, just keeping an eye on this little flag pattern. Little flag pattern with ABC correction area. If it continues to break down, let's update the retracement area. First little target on the Russell is about 1998, so 2000, and then the key line in the sand right now is 1972 for the Russell. Let's just see. Also, that would be, it couldn't even get to the first target on the double bottom. So that gets, when something doesn't even get to the first target and reverses, especially if it starts breaking below this channel, that is very bearish on the Russell, but is not stopped out the double yet. So I will continue to watch that. Let's see. Mike, can you draw the long-term trend line on IXIC? How far did you go back from March 09 from February 16? Where do you see the max pain in terms of kissing this trend line floor? Your best guess? I'll take a look at that in a second. Trying to mark the floor in case of a crash. Thanks. Ooh, we got some, and I'm not even that bearish. Wow. Let's see, IXIC, which is the composite. So where would I go? Let's see. I mean, you can go all the way back to here, but here's where I'd, at least for the time being, I'd start your trend line. That's, see, you're going to go defining point to initiating point to defining point. All right, that's going to be a very key area. I mean, we could go back even farther. I'm just looking to see. That's going to be there. I'm just trying to see if there's a really good longer term. This is where all right, here's where I'm going. This is where you can, yeah, here's, all right, so now we're going to get a series of cascading, we call these cascading trend lines. So here, and I mean, if we got back to some of these longer term ones, wow, that would be, whew. I'm just seeing what else we have here, because this is something I don't teach or I don't put out publicly to people, but a lot of times let's see, we're right around, I'm just doing some off-the-cuff analysis. This is, you can see exactly what I'm doing. All right, well, here's, first of all, even before you get to this longer term trend, this is an area I'd be watching based off of this channel line. I'm actually going to do another one here. Hold on. My first longer term target area would be right in here. Now, short-term targets, should we break down below this defining point of around 13,100, I'd then focus on about 12,600. And why would I focus on there? Because you see, you'd have to zoom in a bit more, but you see how resistance, support, support, support. Okay, and I'm watching it on key closing and opening basis, and that's a harmonic level right there. So that would be the next major target, okay, below this defining point. Below there, you get into your next target area would be here, about 11,950. So I just go to 12,000 at that point. Key resistance, and this was key resistance because it was 1, 2, 3, a triple top area. All right, which then was a continuation pattern. So now I'd be watching that for support, and then even longer term, because look, longer term, you know, we go into a more substantial longer term bear market. You got your 50% run up from this whole move from these lows at the COVID lows, we'll call them. And you have this longer term projection channel line. So that's a projection channel line. I would watch that. You get below there, then I'd watch for this next projection channel line with the 62.5. So these are areas I'd watch for convergence. This would be because if we slowly bled out, I'd watch for something around here. If we more rapidly bled out, I'd be watching for stuff around here. So that's sort of the way you can structure a chart using your longer term trend lines, some projection lines that you want to do for projection lines. Go from key major swing highs, and don't just blindly use them. Use them with your harmonic retracement levels. And then don't just blindly use that combination. You start watching around that area for, I'd start looking for significant key shorter term levels around that. Let's see. So does that help? And you can do this on, it works on stocks, it works on, but this gets you sort of a guidepost. All right. A guidepost of different techniques. And that's the benefit of watching this, because there's no telling when I'll teach a little new thing. Now, we bounced off. You see all this prior support right in here, which you bounced off of, coming back to this prior support becoming resistance area. And again, this is all bearish. You have the bearish mode on the daily. The weekly, you have bearish mode on the daily, so rallies are to be sold. Again, people think, oh, you're in bearish mode longer term. Yeah, but you'll still get rallies. Just don't get greedy on the rallies. And there'll be stocks that continue to rally. That's where the sector analysis is so, I wonder how many times I could plug that. Sector analysis is so important now because you want to be in the stronger sectors, and then within those stronger sectors, you want to find the strong stocks. Why? Because they will generally do well in this environment. And even if they pull back a bit, let's say they're like consumer staples, you get a rally, they might pull back, but that's a great area to do a buy, and they won't pull back a ton. So your portfolio is still more stable. Wavy asks, can you take a look at Apple, one of the best mega caps in tech, only 8% from all-time highs? I'm gonna do something longer term on Apple, and I'll preview it here. Yeah, it's still, here's your Apple chart. Little double top, by the way. First target almost hit, and that only takes it to 165. This is just a huge, I think Apple's going to start getting into that. It's already started in the huge distribution top. Okay. I'm watching for a lot more pain longer term in Apple. And you can see, look, there's the monthly. Here is the monthly. We just reconnected on here. Longer term, I could easily see Apple returning to 134. You will get rallies. You're still getting a lot of people rotating into Apple as a view of safety. It's not entirely safe to me. And here's another thing. Apple is a huge component and in a ton of funds. I'll do a little preview of that real quick. If you come to, boy, I'm showing all the stuff. If you go to ETF.com, here's why I'm, oh, what? Ooh, I went to, there we go. I typed the wrong thing. But we come in here and we go to Stock Finder. And you go to Apple's probably in the list. Yep, right there. Here's my concern. See this? 366 ETFs hold Apple, 1.2 billion. All right. Why do I bring that up? Because this is what's led to when you have a concentration of these mega caps, when things are going up, the funds have to keep buying and it becomes a feedback loop, a positive feedback loop, meaning moves up, funds buy more, Apple moves up. Apple moves up, funds buy more, because a lot of them have to, and not a lot of those are discretionary funds. There are some Apples in some discretionary funds, but it's in a lot of just funds that have to keep rebalancing by Apple. What happens when some of these mega caps, it's not just Apple, it starts to turn? You have the opposite happen of what happened during the run-up, okay? They have to start selling. So especially if Apple really starts breaking down, especially back below about 162, we can start getting Apple distribution out of those funds, where on the sell moves, they'll be forced to sell Apple. What happens when they're forced to sell Apple? It's a feedback loop in reverse. It puts more pressure on Apple. More pressure on Apple, more selling, more funds have to sell out of Apple to rebalance. So the same thing that was benefited everything on the way up, you get these concentrated positions. Take a look at Microsoft. Take a look at Apple. Take a look at some of these other, Tesla. They're in a lot of these huge ETFs, and you start getting into major distributions of some of these mega caps, and you can get a lot of pressure, and it becomes another feedback loop on the way down. Let me know if that makes sense. Once Apple starts rolling over, NASDAQ's in big trouble. Good evening. Good evening. Again, this is why tuning in or even watching this on replay, you never know what you're going to get from me. But I'm sharing some great information, at least I think. Let me know in the comments if you think this is valuable information, at least to keep on your radar screen. And how many people are talking about that, the potential unwinding of some of these mega cap positions due to forced selling. It's not like they can go, I'm just going to ignore that. It's going to be forced selling, and not because it hit stop losses, because as it was forced buying on the way up, it can become forced selling on the way down, especially when you have longer term critical stuff broken. Now, we're not even near to 200, and that's going to get really interesting. If Apple gets down back to the 200, which is at 150, and you start breaking below the 200, then could really get into some interesting unwinding in Apple. Still a fair ways off, but keep that on your longer-term radar screen. Thank you, Josh. This is the whole point of this channel. And again, if anybody wants to help support it, Patreon, buy me a coffee, super chats, always appreciated, and it goes right back into the channel to do live streams like on Super Bowl Sunday, doing stuff like this. Thank you, Mike. Thank you, Christoph. Thank you. Again, does this have to happen? No, but if it starts breaking down, you will get in these feedback loops. And I should know about feedback loops. I'm a trained engineer. Invaluable, always learn something new. You are welcome, Michael. Can you take a look at BX? Sure, I would love to. BX, double top. Ooh, Blackstone. I would still, based off this. Ooh, look at that. Clear path move. This turns into an advanced clear path move, but all these targets are within a clear path move. Second target being the 200. That is a golden opportunity, even on any rallies on this. They just paid the dividend out, and earnings are out of the way. Wow, 117.50 would be a fantastic target. You break below that, you've closed this gap. That gap was already closed. You still have a gap down here. 114.50, and then the next major target would be to the gap fill, and it's not to the top here, because remember, a full gap fill is to the close. This was a red candle. The close is 111.47. So you still have a lot of downside magnets. Would not ignore the 200. You got one bounce before it went back below, but that's still returned back into support. So that would be key. Your double is still easily in play until it turns into a triple, and I'd need it to get back above 135 at least. You have actually a significant level right here. I can tell you right now. Yep. Right around there. Oh, look at that. Resistance. Emotional candle through it. Retested. I'm giving away more little clues. Retested. Key close, just missing it. Retested with that high. Then look at this. Look at that significance at that level. Look at that significance at that level. Gap through it. And then emotional. This is emotional. When you have a candle down here, runs up through it, cannot even sustain a close through that level, and then you have a reversal and follow through to the downside. So as long as this 135.50 level is not broken, this is still shortable or short-term to the downside at least. So even on rallies, I'd be looking for rollover plays in that. If you are long this would definitely be something I'd be hedging or know where my longer term stops are. So there we go. Hope that answered your question, K. I'm just going to call you K. K News. K News. That's sort of catchy. Definitely the best for technical analysis. Well, thank you, Abraham. I really do appreciate that comment. I've put many years into this. Many years. I'm not some newbie in this. I mean, I started studying technicals, wow, in 1988, and I started to get proficient in it in 91, 92, and I became professional in 92. So that should give you a time frame of how long I've been doing this. What do you see on ALB? 124. 124 PE ratio. Weekly head and shoulders, but resisting lately. Odds still favor the downside. 124 PE. Is that actually? I just want to take a look at that. Hold on. I'm not doubting you. Yep. Let's just go with 125. Look at that. That's a decent market cap too. Had the double bottom pattern right here, which completed. Your 200, that's holding up remarkably well. I don't even know. What are they in? I don't know anything about them. Engages in development, manufacturing, and marketing chemicals for consumer electronics. Now, this could be interesting. I think it's fundamentally way overvalued, but if you look at what it's in, this is what I'm looking at. Oh, I'm in the way. Hold on. There. Let me scroll up here. Look at this. Here we go. See this? Sorry, I dipped out of the picture, but this is the thing. You look at what it's into, and this could be, at least because it's into some areas and sectors that are bullish. So I wouldn't be over bearish on this. I would wait for tradable patterns, okay? Right now, tradable pattern, I'd still be watching for this gap fill. Let me take a look longer term. Rotation zone flat has some major resistance up here. That's nothing. You got your head and shoulders here that did. Let me take a look at this. So this is a properly formed head and shoulders. Just as great teaching anyways. Properly formed. You want a flat to upward sloping neckline. It did trigger. So let's take a look at the targets. So we go from the head to the neckline. And then we have to project it from where it broke and closed below. So that's where it broke. Technically, that's not. Technically, that's a walk away, but now let's see. My key area on this would be technically the walk away stop, but I'd be using 240. As long as you don't get a close above 245, this is definitely shortable. I wouldn't even short this. I would just watch for buying opportunities on still dips for this. This would not be something I'd play to the short side just because of this information over here. I know it's a high flyer with the PE ratio, but if they're growing, I'd have to do more fundamental research, but this would not be a short. Would I be using these longer term levels for? Because this is on a weekly basis. So based off that on a weekly basis, these could be key areas, especially this 180, 178, 180 area. You have this prior area of resistance becoming support. You get back down there, I'd watch for reversal patterns. Again, you already came off a double bottom right here. These are the kind of things I'd watch for short-term plays. And look at that. First, second target, little pullback. This would not have stopped it out, and then a little run up there through the final target. That's the kind of things I'd watch for potential plays with. And what else? We actually had another little buy set up here. So I'd just be watching for pullback potential buys, because even if you're doing pullback buys, other key area for support I'd watch is this little 205. You get a close below 205, then I'd be watching for the bigger pullback. Until that happens, I'd be willing to play short-term buys with aggressive stops. Large lithium supplier for EV batteries, and they're not just in that. Thank you for clarifying. They're in a lot of different things, which has a bullish bias right now. So even with a high PE, you have a very bullish bias to it. Would you give thoughts on AMD? Would I give thoughts? Ugh. Yeah. By the way, I'm doing some more research in the semiconductors. There's a lot of short interest developing, so there could be some short squeezes in semis. But again, they have to be well timed. Right now, this is breaking down again. Let me take a look at that weekly. See, weekly's in bearish. It's caught between here. Oh, this is an interesting position. Ooh. This could be triggering a long-term sell signal in AMD soon. It's got a first cross rotation zone. At that 200, I'd not touch this at all right now. Now, there will probably be some squeezes in this at some point. By the way, your aggressive buy would be above Friday's high, but I'd actually need to close back above. I wouldn't touch that until it got back above 133. It's caught here. What I'm watching on the longer term basis, you got their first cross rotation zone, which again, we don't trade crosses, but they're helpful to keep things in perspective. Okay, so it's in bearish mode, which means sell the rallies. You're right at this 50 period, which it bounced, got into the first cross rotation zone, could not get above this key support, turning into resistance and now breaking down. Ooh. If it breaks below that 200, I'm watching for this. Let me take off some of this because they are not in play anymore. I'd be watching. I would not be aggressively buying this. I'd be watching if it gets back towards this 100 level. I'd watch for another re-entry pattern on a short-term basis, not a long-term basis, because that could be for a short-term bounce only. Because we might be getting a long-term sell signal in this. Well, let's see. Can we take a look at? I'm just going to take a couple more, and then I'll get through some questions. Then I'm gonna wind it up because you know, it is Super Bowl Sunday, and I still got some more work to do, and I would like to catch the beginning of it. ENPH, that is not bullish right there. They actually had good earnings, did they not? Yep, they beat. Gap above the 200 and back to fill the gap. I just watch for another short-term pattern. Again, sitting at this significant level, which was already on the chart, 143.35. If you get below that, I'd be watching for a pullback to all the way to 120 again and see if it can get some bottoming in there. I don't even have a short-term buy pattern on this yet, and this is bearish. When it popped above a major key level and then couldn't sustain it, and then immediately and essentially in 3 days fills the gap. This is going to trade with the market, though. So if the NASDAQ's really weak, I'd watch for, again, continued weakness in here. And if you're long it, I would keep very tight stops. Where do we sit on a weekly basis? It's in bearish mode on the weekly. Remember, sell the rallies. Rally gets sold. Daily is in neutral mode. But you're getting the double cross pattern. What does a double cross pattern mean? It just means that you return to the higher time frame rotation zone. And you see here it was rejected with the weekly rotation zone rotating back down. So this is nothing I'd be looking at unless there was another solid bottoming pattern like this prior double bottom. And then that would be a short-term play, not a long-term play in ENPH. Even though it's end phase energy, this would not be an energy stock that I would be focusing on. Remember, there's still strength in the energy sector, and this is weak. So you can find better things. Okay? In strong sectors, find strong stocks. This is a weak stock stock in a strong sector. I guess you wanted Ethereum, Sterling. Ethereum, again, we got the run up. I am watching for, again, bearish mode. We got to where I was watching for corrections and we're rotating back down. I'm watching for now continued weakness in Ethereum and a retest of this low area to see how it goes there. I will put out another crypto update this week in the next couple days, though. So stay tuned for that. What are your thoughts on CCL? CCL, I still can't be. When's their next earnings? Oh, end of March. I'm still not bullish fundamentally on cruise lines yet. Rejected from the 200. The only way I get interested in this is if you get a close back above about 23.50, and you had this little double pattern, which let's see if that had the first and second targets in it. It didn't on the daily. No, didn't on the 4 hour, but you see here how you can still use. There's another tie into what we talked about before with using the targets, and many times they'll get hit. It's just the probabilities drop, and you're running up with the 200. This, oh boy. Be watching potentially to see how it gets support around 21 and if there's any short-term bottoming pattern. But this, I find better things to trade in these kind of environments. This is not, again, rejected pretty substantially from from that 200. So either I need to come back down and find a bottoming pattern, or I need to get above the 200, retest, and then rotate back up to show it held. Right now, it's still key resistance. So I'd be very patient from this from a bullish point of view. Wouldn't be aggressively shorting it either, but I'd be watching at key levels for reversal patterns. So this is just something I'd sit on my hands until it gives me more information. You're welcome, Mike. Good. You spotted that 200. Raj, let's see what Raj has to say. Mike, historically, foreign market starts to perform better when U.S. assets are inflated or expensive. Relative PEs are lower. We should add those to our mix. China, India, Australia, and Brazil. And especially, I could see Australia, Brazil with commodity plays too. Good point, Raj. If you want to, again, come up with some things you think we should look at, please do. You've done that in the past. That would be, great help. I'll look to see if anything crosses my radar screen in those areas. China is a little iffy still for me, but India, Australia, and Brazil would be key things I would focus on. Thanks for that comment. Again, Raj, great member of this community. So come up with some lists. And even, you know what, reach out to me via email, Raj, if you want. You go to the website, pathtradingpartners.com, reach out, and we could take a look at some of the things you might be interested in, and we can roll it in to help other people. You are welcome, Tesla Force. How can I find out more about sector analysis you mentioned at the beginning? I put up a video today. Just go look on the chart. You'll watch it. It's 25 minutes, but I think you'll learn a lot. Gonna be out for all my American friends. Enjoy the Super Bowl. Thank you, Christoph. Sorry I couldn't get that comment earlier. Ken, thank you for being here. Ken, another great member. He helps me with thumbnails. So everybody, a big shout out to Ken. If you like any of the thumbnails, a lot of them are from Ken. Again, because I am not very skilled at that. So thank you. And thank you for being here. Thank you, Raj. We'll dig up some ETFs. Fantastic. And we will analyze that on the short and the long term. Thank you, Raj. Wouldn't it be much more useful for your subscribers for you to post everything on one channel so we can get all your thoughts real time on any topic in one place? Pretty much everything is on this channel. I do stream to multiple channels just because some people watch them on different channels. We are trying to still grow Pure Exposure, that channel. So if you're watching on there, please subscribe to that. And that's also stuff that we're going to do in the future. We used to do more TV type things on that, and we're looking to restart that up in the future. That's why we have multiple channels. The main one I'm posting, everything is going to be here. Besides, I started a YouTube Path Trading Shorts channel, which I'm not even publicizing yet. And they will be like short videos. Like I'm analyzing Disney stock in under a minute. I'm analyzing Netflix in under a minute. I'm analyzing this in under a minute. So once I start promoting that more, they'll only be short. So you can tune in that like if you want, or I'll be taking a request like for quick stocks. I'll put one up a day for a quick little 1 minute analysis. That's going to be another channel. And that won't overlap with this one, but everything else will be on Path Trading Partners. Thank you, Wavy, for appreciating the Sunday prep. Again, EMXC. Again, this is great. Now that is yeah, I haven't looked at this ex-China, and that's something that we can watch. I'm actually going to, I forgot about this one. EMXC. Sorry, I had to write something down. I'm going to do some more analysis on that, and we'll do a longer term looking at that. Thank you, Michael. Again, big shout out to Michael. Thank you for the contributors. Having to click around to find your comments. I do like the separate channel for Bob's questions, though. My 2 cents. So you're talking about Discord. It's tough to do. I'll take that under advisement. But there's a lot of people that talk about a lot of things, and the different channels help because there's no way I can scroll through all that. Best thing if you're on Discord, by the way, link if you want to join it is below. It's a $10 one-time fee only. It's to help people start discussions and people who want to elaborate more on this. But if you want to reach out to me, and I can't respond to everything at times when I get super busy, but if you tag me at spec, you'll see that, and I can try to respond there with stuff. Sterling, thanks, Mike. You have helped me so much. I feel like a ship that now has a rudder. Fantastic. I'm glad. Again, that is the point to all this. I'm just going to peek in on a couple other things. Crude. Still watching for a topping pattern here. Now remember, on the daily basis, we have 2 kinds of corrections. This essentially was a sideways correction. However, if we get a close back below about 89.50, I'm again watching for the bigger pullback. This, we have a higher high in crude, and that was based off the war drums banging. But we have a divergence up here, so still watching for a bigger rollover play. Is that something I'd short? No. But that's why I was talking with ENPH earlier. That would not be a stock, especially based off this. I'd be looking in because this rolls over. I think that will get increased selling. I'd be looking to get in some stocks that have withstood a run up and pull back slightly, but don't trigger major sell signals on that pullback, and then look to reload those stocks. That's why I wanted to touch on crude. Gold, again, running up. Look at that harmonic level, 1869, and coming back down. Again, I am bullish on gold, but it will be whipsaw back and forth. So still bullish on gold, but you have to pick and choose your places. Silver hitting the second target, still watching for that potentially third target and harmonic level right there. Notes, we could be putting in a short-term bottom here. You see divergence pattern. Let me go to the weekly. Weekly, we're getting potential divergence down here, much lower low, higher low there. Daily, we're getting divergence signals, potential reversal. You want to get some confirmation. A close above 126.24 would be some confirmation. Then I'd start watching for a bigger pullback, which would be decreasing yields short term. Do I think the decline in bonds are over, or notes are over? Not long term, but I'm watching for a nice little pop back into the weekly rotation zone and some new sell signals in that. Dollar index, here's your long-term view, still holding the weekly rotation zone. You see rotating up, but you get a close below about 95.10. Then I think the short-term dollar run-up is over. So that's the key area that I am keeping an eye on. Little short-term double bottom, hit first target, still watching for that second and third target. So still short-term bullish, long-term watching for a potential bearish rollover. With that, I'm going to wrap it up. Final comments here. Looking forward to the long-term signal setups and the courses coming. Appreciate all you do. Yeah, and I'm switching content providers for the courses, and I'll start rolling out this new longer-term inexpensive one for people, and it also helps support the channel. That's why I'm making it inexpensive and helping people position themselves for what's happening now. And then I will be rolling out an intro course after that, then some more advanced stuff over that. So again, depending on what your level is and how much time you want to spend, there will be things suited for different people. Thank you. I'm dramatically better options trader because of you. I am glad I could help you. I'm glad I can help so many people. Again, thank you for spending your Super Bowl Sunday with me. Trade well, trade smart. Don't try to be a hero in falling markets. Wait for your long-term setups, and you're better to keep your money, on the sidelines if there's no good setups, and wait for those great longer-term entries. I'm bullish on Super Bowl coin flip with tails. All right, I'm going to see Josh. You're going with tails. Then I'll go with heads for the Super Bowl flip, and we'll see who's right. I just don't really have a care, but I'm going with heads. Josh is going for tails. With that, thank you, everyone. I will talk to everyone. Maybe we'll do a market open. I'll see how it's looking tomorrow morning. I'll put that in Discord if I'm going to do a market open. Until then, I will talk to everyone later. Check out that sector overview. And by the way, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button, and be one of our long-term viewers that adds great content to this channel and helps us all learn and grow together to be better traders and investors. Until next time, bye for now.